Alright guys, yes, we're about to get into one of the best cycles in the stock market that you can be. Yes, as you guys can see here right now, this is my average return in the stock market since the end of 2018. And why that time is so important? Well, because what happened back then is about to happen again. And I'm planning to take advantage of that again and make a lot of money just like I did in these past 5 years. Yes guys, if you haven't been in my channel before, my name is Omar. I like to talk about business, money, how to be prosperous in life, and how to grow in your life. So if you like those type of chat and environment, don't forget to subscribe and smash the like button because you're gonna find everything good in here. And in today's video, we're gonna talk about what I did, why this is about to happen, how is this all related with the Fed, and what is my plan with these new changes that are about to happen next month. Yes, on September, we're talking about to have the first cut rate from the Fed, right? So, and this is a big deal. Actually, the prediction is kind of like set. Yes, it's gonna happen in September. The Fed is gonna cut, and this is what the estimations are in the market right now. So, if you guys can see here, the odds on trades putting, right, rates right now is 61% for September to have a rate between 500 points and 525 points. This is great. That's a big drop for where we were, what, 6 months ago when we were into the 750, which was an insane number. Whoever was buying houses or cars over there, they weren't getting as huge interest rate, right? So now on November, there's a 49% that we're gonna be between 450 and 475 as well. Yes, 475. That's really good if that actually happened. And as you guys can see on December, the highest probability, which is 42%, is that we're gonna be between the 450 and 475. I actually not too worried about what's gonna happen in December. But what I know is that the Fed is gonna come in September. They're probably gonna cut rate. Now the only discussion we're gonna have is how much they're gonna cut. But that's all they're gonna do. And what happened when the rates are cut? What happened every time the Fed does this? Well, it affects the stock market a lot. And let me tell you something. The Russell 2000, which track the small cap, is one of those that get really crazy in gains every time this happens. Look at this, guys. If you see historical, US small cap outperformed the large cap during periods of growth and slow inflation, right? So this is the perfect scenario for small caps right now, guys. Not only small cap, medium cap as well. Because mega cap, they already have the growth they needed from this year. In my opinion, you still have a few that will keep growing like Google and Meta, in my opinion. But for the other ones, I think they've already went up enough. I'm talking about Microsoft, I'm talking about Apple. Those stocks already grow what they supposed to grow, and I'm not saying they're not gonna grow more, but I don't think they have the same opportunity that all the small cap has right now. Yes, and why I say that? Well, this report is telling us, hey, history and math has told us in the past that every time we have growth in the market and low inflation, we are gonna have the Russell 2000, which is small caps, outperform the S&P 500. And how do I know this is about to happen in September? Well, one, this is the current inflation rate. Numbers just came in this week, right? Look at this. We are at 2.9. This is the lowest we have been in inflation since 2021, guys. Yes, since 2021, this is the lowest inflation rate that we have had. And this is check one for what improved on the Russell, right? Now, let's talk about the other one. Right now, if you check how the Russell is performing against the S&P 500, you can see right now that the S&P 500 has been beating the Russell 2000 and many other index really big. Look at the difference. The gap is big right now S&P 500 17.34% in this past year. Russell 2000 only 5%. What this tells me is, hey guys, we have a bunch of opportunity to actually go above in growth than the S&P 500 as soon as the Fed start cutting rate. But of course, one thing that we have to talk, okay, the report says that you have to, inflation have to go lower, which we already saw, and growth has to happen. I haven't seen any report that indicates that the US is gonna slow in growth. Actually, when the Fed start cutting rate, some sectors are gonna start growing again. We're talking about real estate. People's gonna jump in to buy houses now again. And yes, we have a big demand right now, but believe me, when that cuts start happening, you're gonna have a lot of people putting, trying to get a hands in one of those houses. Also, what this tells to the other industry? Well, retailers gonna start selling, Home Depot is gonna start selling, all materials they need for this are gonna start selling. All of this is gonna start happening in there. This is gonna push for growth. And rates do not affect only houses. We're also talking about cars. Cars prices were really crazy past year. Used cars were getting really crazy, and people's gonna try to go back to the old behavior or buying a new car instead of a used car because rates are gonna start going down. So, and this is gonna help with the growth of the whole economy. Right now, the unemployment is about 4.3%, which is normal. We're not in crazy numbers. And this is a perfect opportunity for the lower caps outperform the S&P 500. Look at this. Look at this right now. Large cap growth versus small caps. Since 2022, look at this number. 2022, we didn't have any cut rates. Look, everybody was in negative, so for me that doesn't count. Yes, the Russell 2000 was better, but we lose a lot of money on 2022. Now, 2023, S&P 500 outperformed. 2024, January to June 2024, S&P 500 outperformed the the Russell 2000, right? Look at what start happening right now. As July 2024. Conversations about the Fed is gonna start cutting rates. Mega caps are already in great valuation, right? Or really high valuations. In my opinion, for example, Microsoft is in a really crazy valuation, right? Look what start happening. Russell 2000 outperforming the S&P 500 by a mile. By a mile. And this is gonna get better and better for the Russell 2000 and the small cap as soon as the Fed start cutting rate. And this is how I actually managed to make a lot of money in the stock market by investing from 2019, from the end of 2018 all the way to 2024. Why is that? Well, let me show you this correlation between Fed cutting rate and performing of the stock market. Look at this. In all of the scenarios except for 2001 and 2007, the market went crazy up as soon as the Fed started cutting rate. Why 2001 and 2007? Well, 2001, we have the bubbles, right? The dot-com bubbles. I mean, everything went south, and doesn't matter what happened with the rates when everything is a bubble already. 2007, we got the recession, right? If you got recession, you know that this is going to go in the negative number and cutting rate won't save you. And that happens when the Fed takes too long to start cutting rate. That's the reason. But once the next year the stock market starts going crazy after the rate was cut by the Fed, 2019. I was buying a stock crazy heavy from the end of 2018 all the way to today's day. But I get a crazy amount of gain when the rates get cut in the middle of 2019, right? My stock went insane crazy. Tesla was going on crazy, Meta was going on crazy, Google was going on crazy, cell phone was going on crazy. I mean, I was able to get a bunch of gains just because the companies were growing. I get them in a really good valuation, and also the Fed helped me when they start cutting rate because they really bumped the market when this happened, guys. And this is an opportunity that you guys cannot miss. The only way this can be missed is if and only if we get into a recession. But look, I was checking and reading the report from JP Morgan, and this is what I found that was released this month on August. Look at this. By August 15, the probability of a recession is now 35%. It went down from 45 to 35%, and depending on what website or research you're looking at, some people are talking about 20%. Basically, it's a really low probability of having a recession. Now, look into the right side. The key takeaways from JP Morgan. The most important one, in my opinion, is inflation coming down, right? They say with inflation coming down, now they see a 30% chance for the Fed to keep the interest rate. What they're saying is there is only 30% chance that the rate is going to stay the same. So we're saying that 70% of the chance the rates are going to get cut next month. So knowing that the Fed is going to cut the rates on September, that we have a bunch of small caps in normal valuation or some of them in really low valuation, right? So what does this tell me? What this tells me is, hey, I'm in the same scenario I was in 2018, right? I didn't know rates were going to get cut by July 19, but I was buying a stock based on valuation. I always do month over month, right? In this time, I know that the Fed is going to cut rates on September. So what am I going to do? I'm going to keep buying those small cap companies that I know have future, so I can make a lot of percentage in growth from those stocks. Plus, I'm going to keep taking advantage of all the cheaper valuation from some of the mega caps stocks like Google, Meta. I'm going to, as I mentioned on my previous video, the Google video, if you haven't watched the video, you should watch it. I'm going to keep buying this Google until it hit the price I mentioned on that video, right? Straight. Google, for sure, I'm going to be buying it. And I'm going to grab some small caps that are tempting me a lot, that I have really good valuations, that they are making money, and that they keep growing in a normal phase. Like they are not going with crazy debt or none of that. Because those are the type of stocks I actually like. That's what I'm going to do to take advantage of this. So now, you have to think what you're going to do to actually take advantage of this and actually surpass my gains from the next 5, 10, 15 years, guys. Hey, if you like this video, don't forget to subscribe, smash the like button. It helps a lot with the channel. If you see anything useful information on this video, please let me know in the comments. And guys, I'll see you in my next video.